Hi everyone, I'm Ken from CryptoTradingKS. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining positive excellence in the process. Let's run the numbers. We can see in the past trading session, global markets were basically mixed, but Russia had a bad time. Overall, the markets were slightly up. Energy and healthcare took a hit. Tesla, Amazon, Google, and Apple were doing well. In recent economic data releases, we saw core retail sales just blow out estimates. The Empire State Manufacturing Index came in a lot stronger than anticipated, and retail sales also did really well. But why was this? It's largely because of the reopening trade. We saw very suppressed economic activity in November and December, which was really quite strange, but we've had quite a rebound. And why are we getting the rebound? People are emerging from the lockdown. In yesterday's video, we talked about services inflation and how that was going up. Now you know why. And if we look at the global GDP growth rate, we're expecting growth across the major economies. Of course, Russia is in a little bit of trouble at the moment due to all the economic sanctions. And a call out to Ireland, 13.5% GDP growth in the next 12 months. Well done, Ireland. And the islands of Australia and New Zealand are doing quite well as well. We're seeing a raft of economic data come in stronger than anticipated. This makes a soft landing more and more probable. In yesterday's video, I pointed out that the main global markets are very resilient and they've overcome a level of resistance. This is something that you want to keep in mind. I know the news and the media, well, same thing really, has been really negative of late, but that's because the news headlines reflect what is actually happening in the markets. If it's a red day, the news headlines are red. If it's a green day, the news headlines are green. But we must look beyond that kind of crazy momentum to the up and downside, because price is always moving in a wave. One of the real questions is, why is Bitcoin rallying? And we know Bitcoin is a very good measure to actually gauge what the stock markets could do next. Bitcoin does have a history of repairing itself first and rallying first, and the major indices catching up to it. So just be aware of this. What I can see in all the statistics is that US government 2-year is starting to roll over. And there's a few more things that we want to put on our radar. Even though the DXY actually came up with quite a bit of power, it impacted gold, but it did not impact Bitcoin. And why is this potentially the case? Because when we look at risk appetite through junk bonds, we may be forming one of these higher lows. And this particular higher low could rebound quite substantially because we're seeing a lot of positive momentum inside the economic system. And one thing that we're noticing is the probability is 12.2% of a 50 basis point increase in the federal funds rate. That hasn't actually moved that much, despite the yields coming up parabolically. When I posted this, Bitcoin was up 8.22%. It's currently up 8.64% to 24,110. And Ethereum was up 6.6%, 6.66% to 1663. There's a lot of sixes in there. Currently, Ethereum is up 7.47% to 1671. Gold took a bit of a hit because the DXY went on a rampage. Basically, at the last video, we were just here and we noted that there was support underneath the DXY. The DXY had flirted with the above smart money sell area, and it was going to take a bit to get through it, and it did. It's now come back and retesting it. One thing to be aware of in gold has a massive smart money buy area below it, from 1807.40 to 1834.90. This is exactly why gold is holding up very well at present. There's a smart money sell zone in between 1851 and 1853. Then the market structure pops up to about 1865-80 to 1868-70. You can note the variety of different smart money sell levels above. Gold has been really interesting. It's just been ping-ponging or pinballing between smart money buy and sell levels. And this is what the CTKS method teaches you. It's all about understanding where true market support and true market resistance are. It doesn't go from recent price action. It goes from all of price action. Turning to the top 9, we can see that Bitcoin is the greatest gainer. And this is really special because a lot of the times the alts have a gearing factor towards Bitcoin. If Bitcoin comes up 1%, they'll come up 2%, or they can come up much, much more. But you can see that's actually changing at the moment. Bitcoin is leading the pack. The greatest gainers, when I took this particular screenshot, were Bitcoin, Ethereum, and Doge. The greatest gainers in the top 100 were ASTR, Mina, Optimism, Render Token, Stacks, FTM, APT, FXS, and GMX. We can see the greatest losers in the top 100, they're basically stable coins. PAXG, which is a gold equivalent, USDT, USDC, Tether, Circle, Binance USD, DAI, the stablecoin, True USD, USDP, USDD, and FI. What's really interesting, when you look at Pax Dollar, remember that the SEC was going after Binance USD, not the Pax Dollar. Just a point to bear in mind. And it's not just gold or the DXY that ping-pongs or pinballs between smart money buy levels and smart money sell levels. You can see it all the time in the stock market and also in crypto. Apple did it just recently. When we look into the SCs or the Stanfield zones on Apple, we can see Apple currently post trading at 155.30 and closed at 155.35. It's just below a smart money structural sell level, and these sell levels can be quite important to understand. We've seen the sell level come in here and push Apple's price down, but we've noticed a bit of momentum and a bit of increasing momentum in Apple's curve at the moment. So it wouldn't be surprising if Apple starts to dip into this 156.44 to 158.38 level. And you can learn where to draw these particular lines, these zones, through the CTKS Method Standards Certification process. When you're actually looking at your CTKS charts, just bear in mind that when there's a lot of fresh air, what it actually means, and what fresh air means, is there's a big gap between a smart money buy level and a smart money sell level. And what does that mean? There's actually no resistance to stop price from jumping up and testing the smart money sell area. And that's actually what we saw with Meta quite a few weeks ago. The fantastic thing about knowing where these smart money sell levels and smart money buy levels are, it's actually like getting X-ray vision across any specific security or asset class, and it applies to any specific chart. It just takes all the stress away because you know where the ping pong ball can rebound to. We can see with Bitcoin that retail sales coming out and stronger than expected economic activity was pointing to a softer landing, or a soft landing, or actually maybe no landing at all. And this is actually why I did this research. I wanted to show you the global GDP growth rates because it's very important to understand where the whole entire world is in terms of its growth. You can see overall things are relatively green. What would happen if it was all red? Please let me know in the comments. In about 14.5 hours, we're getting the PPI month on month coming out. This is also a very important economic statistic. The easiest way to think about the PPI, it's just inflation, but from a producer level, not a consumer level. But of course, one impacts the other. So the PPI, if it goes up, those price increases are going to get pushed along to consumers. You can see how inflationary pressures can feed on each other. We know that Bitcoin is incredibly powerful to the crypto ecosystem. In fact, where Bitcoin goes in terms of direction, the entire crypto market will follow. And even if you're not in crypto, it's very important to understand Bitcoin's price momentum because it does foretell what will happen in the main markets. Bitcoin has a lot of positive momentum at the moment. You can see these support lines are all raging. They're being supported. Well, Bitcoin is being supported by increasing levels of support. So does that mean that the only way Bitcoin can go is up to this next level of 25,403? Perhaps. One thing that we do know, sharp angles tend to reflect. They tend to actually need to come down and at least gain a bit of support on their way up. And you can see that Bitcoin's power was so strong that it didn't even need to come back to this smart money buy level. It actually consolidated above that and then shot through. Of course, we know what's driving this. There's so many short liquidations and the shorts were piling into the market. So we know the shorts had so much certainty that everything was going down that what happened was that the shorts got liquidated. Be careful of certainty. It's a very, very dangerous thing to trade or invest from. Actually, you make most of the money that you'll ever make in trading and investing when things are uncertain. So we've got a potential for Bitcoin's price to come back and retest this support line along here, probably around the 23,767 mark. If it goes down a little bit further, it's going to find structural buy support down in this 23,142 to 23,226 level. If it starts to dip below that, it also has support, very short-term support, at around nearly 23,000. So just bear this in mind. It could wick under there and repair itself. But what if it goes the other way? What if it starts to just consolidate? Because it's been a pretty massive move up. Consolidation would be reasonably fair. So if we get a consolidation action, just interpret it as price moving in a wave. It can go up and it can go down. What if the shorts continue to get liquidated? We would expect a movement up to the 25,403 mark. Please let me know in the comments, where do you think Bitcoin is headed to next? Ethereum is currently trading at 1666. When we look at Ethereum's market structure from a short-term perspective, we can see lines of increasing support coming through, just exactly the same as Bitcoin. What we do notice here is the shorts were very, very heavily liquidated. The 1690 to 1705 level wasn't reached. We're seeing a lot of rejections here. When we looked at Bitcoin, we saw that Bitcoin could fall down a little bit and find very short-term support inside its market structure and potentially rally up. What we're seeing is something very different here. The market structure, the short-term market structure of Ethereum is much weaker than that of Bitcoin. What do I actually mean by that? When we look at this upward thrust, this upward support line, Bitcoin literally comes down to here. It doesn't meet its structural support, but that's very different. When it comes to Ethereum, you can see just meeting the same basic line pushes it nearly all the way back to the top of this smart money buy level. That's really, really interesting, and this is something that you want to keep your eye on. A few episodes ago, I talked about smart money buy and sell levels, support and resistance. A lot of people found that really, really useful. I would suggest you go back in the video history and have a look at it. It could really help out. So what we can see, if Ethereum loses momentum, don't forget all these shorts got liquidated. It's time for the longs to get liquidated. But if it comes down, How far do you think it will come down? Please let me know in the comments. But you'll notice this secondary support on Ethereum is much stronger than the secondary support on Bitcoin. Secondary support on Bitcoin was actually below the smart money buy level. You may say, Ken, what are you talking about? I'm talking about this particular secondary support line. It's below this smart money buy level, just to point it out. Masterclass students and the CTKS Method students, please keep these relationships in mind. It's very important to look between different assets, different securities. If you're just looking at the stock market, look between Apple and Microsoft and Tesla and Meta and all of those particular stocks. It's important. When you're looking at crypto, look at the relative differentials in terms of smart money buy levels, short-term structure, and overhead resistance. It's really important to understand these things. When we look at the crypto market, we saw Bitcoin number 1, Ethereum number 2, and Doge number 3 in terms of price change for the past 24 hours. So it makes a lot of sense to actually drill in and look at the CTKS method on those three. We can see that Doge is flirting with the smart money sell area between 891 to 908, and it's currently 893. It's within that zone. And notice the very big difference in power between Ethereum and Doge. Ethereum came up sharply and then retraced and went flat. We're seeing something else happening in Doge. I mentioned that Doge is very, very good to predict Bitcoin turnarounds. And if you're predicting Bitcoin turnarounds, you're also predicting the entire crypto space's turnarounds. And when we look at these underpinning very, very short-term supports, but they're important to keep in mind, you can see that if Doge was to come back and hit its first level of support here, it wouldn't be falling too far. It's not going anywhere near this smart money buy level below from 831 to 835. That's literally below the third support. So you can see Doge's market structure is very, very strong. The other thing to note is that Doge is coming up into some fairly steep selling resistance between this 891 and 908 level. What do you think? Will Doge actually get through this? Will it come back and find support around the 876? Will it go through to the secondary support? Will it go through to the tertiary support? Or will it find a ping-ponging of the smart money buy level between 831 and 835? Please let me know in the comments. It's really important to analyze as many charts as you can. Don't just analyze the chart that you're interested in. It won't tell you the story that you need to actually know. To gain context, if this is in fact a pump or a dump, or pump and dump, we need to understand what's happening between the shorts and the longs. We can see the shorts did in fact go on a bit of a party and they've been just recently liquidated, but they've been holding true to their case just until recently. And what about the longs? The longs are not quite sure if they should be in the market or not in the market. And we can see the relative differences between the shorts and longs in terms of liquidations are turning around. I'll show you exactly what I mean. We've got approximately 100% more liquidations than we had in yesterday's episode. 24-hour liquidations are currently 167.17 million across 43,458 positions. And let's have a look at the 24-hour liquidations. Wow, we can see so many shorts were liquidated, and that's coming out in the price charts. It just goes to show just how powerful Bitcoin is. 12-hour, 93% short. What about the 4-hour? 94% short. But is it less? Yes, it is less, because we can see that the price is starting to come down. If it was increasing, for example, if it went from 94% on the 4-hour to say 95% short On the 1 hour, price would continue to go up. This can be a really neat thing to keep your eye on, to understand where things are going and how things can turn around in the crypto market. We see it all the time. Inside our community, we have Rule 130, make volatility your best friend. These up and down actions are nothing more than entry and exit points. If you understand objective dynamic market structure through the CTKS method, it's a real game changer. It's like having X-ray vision over anything that you put money into. There were $150 million worth of short liquidations across the past 24 hours. These people were absolutely certain that the market was going to go down, and it didn't. But you can see, by looking at the charts, we saw increasing upward support. The shorts entering were pulled in by mainstream stories. In yesterday's video, I mentioned that global markets looked pretty strong, and that's what we've seen as the outcome from today. Having been inside financial markets for more than 3 decades, what you will find is that the markets are a mind game. It's very, very important to become independent of the markets. That's why I invented the CTKS method, so you could become independent from the markets. You could just see where price bounds between. TSP, in yesterday's video, we talked about why is out of piece important. TSP had a brilliant thing to share with our beloved global family. TSP said, out of piece is so important, it's like if you're affected by the news, influencers, and other things, then that will affect your trading judgment. You can be capable of observing outer factors because they're just part of the world we live in, and something we cannot control. Therefore, having the strength to balance your mind and not affect your emotions by what is happening outside is incredibly important. Thank you so much, TSP. When external events pull you in or out of a market, you've just got to say to yourself, do the charts support this kind of behavior that I want to do, or is it fear-based? Crypto Turtle added a very important thing to this. We can't have outer peace without having inner peace first. If we're stressed, worried, angry, terrified, jealous, resentful, and hateful towards other people, or we think we're not good enough, inner peace will be elusive. You just won't get it. And if we don't have inner peace, we cannot be calm and we cannot be happy in the present moment. Inner peace drives outer peace. Thank you very much, Crypto Turtle. It's really important to manage your emotional state inside the markets. And unfortunately, the people who need to manage their emotional states the most don't want anything to do with positive excellence. Because a lot of people think that they just don't need it. They just need an entry, they just need an exit, they just need a mythical indicator, and that indicator will solve all their problems. The only thing that will solve your problems, and this goes for life as well, is knowledge. Thank you also to Brett. Brett had some really powerful comments about outer peace. Outer peace, Brett viewed as being like a savings account, a bit like money. If you accumulate it, but then you spend that outer peace, because there's a lot of conflict in this world, and there are a lot of people who want to conflict with you. Brett said, guard your outer peace because it's very important to maintain. Outer peace is the buffer against negative excellence. Negative excellence just costs people so much money, and it's so incredibly wasteful, not just in terms of money, but in terms of relationships, in terms of happiness, in terms of fulfillment. If you find you're stuck in conflict, this is a really bad place to be, because you can't get on with your life, because you're being diverted. And Brett says, if you find yourself coming into conflict with other people, just don't get involved with it. Just put a boundary in play. And a good thing that I like to remember always, and this is a very important lesson, a life lesson, is basically out of any 3 particular people, 1 will like you, 1 won't care at all, and 1 will dislike you. So out of 3 people, 2 out of 3 either don't care about you or don't like you. Focus on the one that does. And a big thank you to J-Link. Outer Peace is necessary because conflicts trigger you and pull you into a state of chaos. What a brilliant turn of phrase, J-Link. And guess what happens if you're in a state of chaos and you're trading and investing? Guess what kind of profits you will make? Please let me know the answer to that question in the comments. Thank you also to John. Outer Peace means dealing with the outside world with respect and kindness. And it's a very good point that John makes. When we actually respect ourselves and are kind to ourselves, we can by default be kind to others. If you find that people are not being kind to you, it's because they can't be kind to themselves. A lot of people say, Ken, what has this got to do with trading? I just want the level. Well, you can have the levels, but if you don't have positive excellence, you will not be able to press the button to pull the trigger, so to speak. I'd specifically love to hear your comments about how inner peace and outer peace make you a better trader and investor. And this is a really important topic to cover because the people who need inner and outer peace frequently wouldn't even consider it as a topic worthy of their attention. I can tell you, after 3 decades of being in financial markets, it's positive excellence that will add the most profit to your bank account and to your life. Guaranteed. Thank you so much for watching. I just love spending this time together. And I'm so very grateful that you're here. Stay safe out there, my friend. Take care and see you tomorrow. Bye for now.